Hey, traders, tariffs just crashed this market, and it could crash your trades too, unless you watch this. So let's go. Hey, that's right. President Trump flipped the switch on Liberation Day, and pow, tariffs took place almost everything in the whole world against every country in the whole world. And oh my gosh, that's okay. Calm down, calm down. Yeah, 10% on all imports, 25% on autos, and up to 54% on China. But he actually cut that back a little, make it only 38%. And futures tanked over 1,000 points last night. Biggest loss of the day in the NASDAQ, or correction, in the NASDAQ in about 10 years, if not more, or maybe ever. Hey, I'm Dennis Wilborn, and I've been trading the markets for a long time, about 30 plus years, doing swing trading with my system, the autopilot trading system. If you want to know how I trade, basically you can jump in and find my book, Trade Your Way to Freedom. It shows you exactly my setups, where I trade markets just like this. Okay, I remember back in 2018 when tariffs hit us hard also. And guess what? The market reaction was the same as it was now. So what does that mean? The more things change, the more they stay the same. But the big thing I want you to take away from that, which I did back in 2018, was in 2019, the S&P took off and rallied over 26%. And so, believe it or not, this chaos could be your gold mine, because in 2018, the autopilot trading service actually did a little bit over 40% as we took advantages of that new upturn. But let's find out if this is your gold mine and how you can mine it. As I said, I'll cover some of the same setups that I use all the time. It's great not needing to change my approach just because the market is in mayhem. So what is going on? What's happening? On April 2nd, which President Trump designated as Liberation Day, he implemented just across the board tariffs on every country that had tariffs on us, basically. There were a few exceptions. But as we said earlier, 10% on everything, 25% on cars, 34 to 54% on China. That's right. The market's freaked out. The Dow fell more than 2.3%. NASDAQ futures were down 4.2%. Tech stocks like Apple were basically smashed. Why? Well, part of the deal was just cost. For the companies that are doing a lot of business overseas and building their products overseas, all of a sudden their cost just went up dramatically. So the panic was on. So some stocks are still standing strong, though, and if you stick around, I'm going to basically break down a couple of stocks and show you the technical analysis on those. Because this particular market is absolutely a swing trader's playground. So let's check on the big picture by taking a look at the indexes to see what we can see on that. As we've said earlier, the S&P was down dramatically. It tested 540 and is holding. It's actually below the 200-day moving average. Not good. The Qs representing the NASDAQ down, 455.63 is how far they had dropped. They're below their 50-day moving average. We'll take a look at the chart on that also. And then the Russell is represented by the IWM. The Russell with expenses now, costs going up, how will it impact the small caps? So what's the good, the bad, and the ugly on the S&P? Well, the spiders are reflecting. We get a big gap down, and we closed real close to the low of the day. Notice the weekly charts are looking to cross over. The 8-week moving average is just about crossed the 40-week moving average, and which corresponds to the 50-day crossing the 200-day, which we're getting really close on that. That would be a huge death cross that could propel us more to the downside. Now, what do I want to be particularly paying attention to here is I want to measure from my high down to my low, and right now we hit 12.48% at the low. That designates the S&P as being in a correction, not quite to a bear market yet, but in a correction. How much further can it fall? Well, if you'll take a look over here on the weekly charts over in this direction here, let me just draw a little circle about that. That low right there is a low that could be a place where prices would in fact bounce. What is that low? That low is equal to $510 approximately. So that's where we could drop to. And I'm going to put some alerts down here, probably about the 514 or even the 520 area. And because oftentimes, if everybody's watching that particular level, then oftentimes what will happen is prices will get close to it, but the buyers will try to sneak in to try to reverse the market or buy the bottom. And so worth watching. The other things that are positives for the S&P is the momentum. Look, really oversold on the weekly chart. However, that green line on the market forecast, one of my favorite momentum indicators, still has a way to go, and it could bottom out. What I'm estimating is around the somewhere between the 7th and the 14th of April. Okay, check this out. NASDAQ is represented by the Qs. This is very interesting. I have drawn a line in here at about the 495 level. That is the 200-day moving average. And the 50-day moving average is rushing down and everything's pointed down. When you're looking at the moving averages, folks, and I'll just give you a little tip here. The moving averages, when you want to look at the stack, in other words, if the smaller moving averages are above the larger moving averages, like the 8 being above the 50, that's typically a good sign that we're in a really nice rally to the upside. However, our stack now is reversed, with the 8 being below the 50, being below the 20, being below the 20, being below the 50, and being below the 50 and the 200-day moving average. And now the 50 looks like it's going to drop. Very negative signs. I want to use the same type of information that I did S&P. And note, we do have one area right here on the NASDAQ where prices could drop down to about the 448 level. That could stop there. But if that breaks, look for it to retrace all the way back down to this level here, which is about the 423 level, and look for a rebound. What am I looking for? I'm looking for a bounce or close to support, but I need a couple of things. I need a momentum shift on at least the weekly, and as you can see, the weekly is larger term momentum is still pointing down. And since this has been a big significant move to the downside, I'm looking for a reversal there, shift in momentum, reversal candlestick, which would be either a hammer, bullish engulfing, or a piercing line, or maybe a bear bullish harami. But that's a weaker signal. So I'll be looking for that reversal to bounce and then head back up. How long is it going to be before that happens? I'm estimating what it looks like the market forecast will potentially get into the lower reversal zone somewhere around the 7th to the 14th of April. So it sounds like these indexes are definitely in tune with each other. And so the other thing that I'm looking at, folks, is how far have I fallen? 16.77%, clearly in a correction. And we'll see if we continue to push down. If I get down to this level here, 423, look at that. That is a 21% correction, which then would put this index into a bear market classification. Well, okay, what's going on with the small caps? Okay, on the small cap, on the Russells, as you can see, it's continuing to fall. Also, how close are we to a bear market on the Russell? Well, let's just go up here and grab the past high. Here, let's stretch it down to the close today or the low. And look, we hit 22.77%. Not uncommon for the Russell to get into a bear market prior to the other indexes. The question we have to ask is, since it is the small cap, it represents a lot more stocks out there, 2,000 of the puppies out there in their various entities. Will the inertia that it's causing, pulling prices down, spread to the S&P and the NASDAQ and pull them down? Right now, it appears as if the path of least resistance is, guess which way? That way, down. So as you can go back in time on IWM, just to point it out to you, notice that the 50-day crossed back on mid of March, crossed the 200-day moving average, and we've continued to fall there. Note, though, we had a really nice rally attempt after that cross, which is very typical, but then that rally attempt failed, and it just kind of fell from the sky like a turd from a tall cow. Okay, as we promised, let's take a look at some of the winners and losers. First, I don't know if I should give the winners first, the losers first. So just in case you bug out from this video and you're not going to watch the whole thing, I'll do the winners first, but you do want to be aware of what the losers are and what they could do to you. So what are my winners that are holding up extra strong? Believe it or not, I was shocked when I found this out. But Tesla's holding strong in a weak market. Tesla has had the crap beat out of it so far this year. So the question is it stopping here? We'll see. We'll take a look at the charts here momentarily. And the second one is, you're going to have to watch the charts to see what the second one is. So let's take a look at the charts. Okay, with Tesla, check out Tesla. Basically, Tesla has fallen since the beginning since about the middle of December last year, and it has fallen to its low here, 55%. Now we're doing a little bit of a rally attempt back up into the 40-week moving average and the 8-week moving average, and it stopped dead in the water there. But what can we take away from this chart? One, momentum on the TSI on the weekly chart has shifted. Now it may ziggy around, look to your left like it did over here. It may just ziggy around and consolidate and then break out and go. Or Tesla may be doing a nice little base here where we've built up, had a positive divergence here, rallied on up. How far did it rally here off this move here? It rallied up about 30%. So we want to be aware of Tesla. Now, is it in a place where I want to buy it right this moment in time? And that's a great question. Okay, in case I missed this, PLTR is my next chart that I want to take a look at. As you can see, PLTR is come down, made a rally attempt, failed, came back down. But look what's happening. It's putting in a potential higher low. And as soon as we take out that high, we'll know that we have a new uptrend heading out. This downtrend line right here, we'd look for a break above that. I would look for a retreat back to about $80 before I would want to buy that. And then, because if I hold the past swing low right here, that would give me a stop loss of about 7%. Upside on this from the 8-day moving average is 43% to the upside. Again, Tesla and PLTR holding up much better than the rest of the market. Okay, we have to be honest with you in that Apple is not the big mover that it used to be. I mean, that's the fact of life. However, it is still a bellwether when it comes to technology and manufacturing of things like the iPhone and the other equipment, Apple products that are out there. But check out what's happening. We're getting what could be a very significant head and shoulders type pattern here. And if it breaks down, look for a move back down to at least 195, 186, or even if it really gets desperate, 166. How would I look at trading this? Well, right now I wouldn't. I wouldn't touch it with a 10-foot pole. However, where does it become interesting? That's another question to ask. Notice we have everything below the moving averages. We've had a death cross on the 50 below the 200-day moving average, and it looks like the path of least resistance is down. Just check out. If it gets down to the 186, I would want an alert there, and 167, 168, another alert there. And then if it triggers, then I could look at, okay, that may be a very good, low, high probability, but low risk area to start building a position in Apple, especially if you want to have it long term. What about the next one? We already saw what the next one's going to be, and that is our buddy NVIDIA. Had a friend of mine this past weekend at church. He basically says, yeah, Dennis, he goes, I bought some NVIDIA. I bought like $10,000 worth of NVIDIA back in 2020. He goes, but I didn't open up my Thinkorswim account for like until just this past week or that kind of stuff. And of course, NVIDIA has gone up dramatically. He goes, my goodness. He goes, I bought really, low, but it got all the way up to, I had like, I think he said like $100,000 or something like that in the account. So you do the math, you can figure it out. But what's going on with NVIDIA? NVIDIA continues to fall. However, we are approaching a potential area of $90.61, $90 or $91, somewhere around there. Continues to fall. Look what's happened. Okay, 50-day cross back on 312. 312 was a big day for a lot of these tech stocks. 312, we had a death cross, and we're continuing to fall. We basically have taken out this low right there, so we just made a lower low. Selling continues to take it down, and that appears we have another area about the 101 area. And so somewhere between $101 and $91 is where I'd be looking to start building a position in NVIDIA. Until then, it's off limits. Okay, as we said, what's going to happen now? It is very big but. The markets are oversold, but are they really at a place where they're going to basically bounce? At this time, we don't know. When do we find out? After the fact, after it's already happened. But there is clues. Look for past support, look for candlestick reversal signals, and look for some positive bullish divergence on your momentum indicators. So maybe this tariff scare, because the other thing could be the tariffs are already priced into the market, and the market's not going to fall that much more. So, comment below. What's your take on this? And what's your top stock in this mess? Okay, so regardless of what happens, you have to have a plan. If you do not have a written plan, I encourage you, hey, drop me a note. Put a comment down in the comment section on the YouTube. Say, hey, Dennis, send me your plan. And I've got rules on one page. That is a plan I've been using for, basically has been getting better and better over the years, but it's a great plan, simple, rules on one page, and I'll be glad to share that with you. Just like I said, just drop me a note down in the chat or just send me an email. You've got my email. It's in the description. So first of all, you have to follow your written plan. Maybe buy the pullback to the 20-day moving average. That's one of the ones that I really like. And then stick to it religiously. Look for momentum reversals. Wait for the bounces like TSI hitting 170, and then you got to get a confirmation of your entry. And then lastly, only trade top stocks, strong stocks that are holding up better than the rest of the market. And one of the other things I like to do with that is have a stable of thoroughbred ETFs. My ETFs, and if you want to hear it, if you basically want to see another video, again, just let me know, that talks about the 3 index ETFs, 3 of them, and the 5 sector ETFs that I trade along with their leveraged ETFs. And we've beat the heck out of the market consistently for the last 12 years. if you want to know about that, just leave me a note. Also, only trade the strong stuff like PLTRs, ETFs, and have a designated way to do this. Why do you wait? Why do we wait for the reversals and the momentum shifts? Because it increases your probability of success by about 80% from just trying to guess where the bottom is. And I've been testing this and using it all the way back since 2012. So here's an example of putting the action plan in play. One is identify your setup. And if you're having trouble identifying your setups, again, I referred you to my book, Trade Your Way to Freedom. I cover all three of my setups and triggers from my system in that book. A link be down in the description. 2 is confirm your signal. Make sure you have not only a setup, but the trigger that gets you into the trade. And the last one that I like to use is execute the trade. Like I showed here, a trade that could have been done with Tesla, or maybe we want to do a trade on Tesla. I identify or if I want to go short on Apple, I identify the price levels, and that's my target shooting. I basically snipe at those levels, and that's where my risk-reward ratio is the best. Never have a stop loss that's more than 8%. That keeps me in play, and that also... Well, it's time to rock the market yourself and be ready for whatever comes your way. So, don't miss this shot. When the markets do these pullbacks and go into even a bear market, if that's what happened, that don't be afraid of the bear. Be patient with the bear, because when we come out of those bear markets, those are some of the best times and greatest times to build wealth, to achieve financial independence. So, hey, watch the next video. It'll be popping up overhead, and it's your fast track to mastering trades like these and taking control of your future. Click it, and let's keep this journey soaring.